The S corporation late filing penalty can cost $195 per shareholder per month. For a business with multiple shareholders, these penalties add up quickly, potentially reaching thousands of dollars even when no taxes are owed. S corporations are a popular business structure chosen by many small businesses in the United States. According to data from the Small Business Administration, about 44% of companies with fewer than 500 employees operate as S corporations, compared to just 22% functioning as C corporations. Why do so many businesses choose the S corp structure? The primary reason is tax benefits. S corporations maintain the limited liability protection of a traditional corporation while allowing income, losses, deductions, and credits to pass through to shareholders for tax purposes. This avoids the double taxation issue that C corporations face. However, not every business qualifies for S corporation status. To be eligible, a company must be a domestic corporation with no more than 100 allowable shareholders. These shareholders must be individuals, certain trusts or estates, not partnerships, corporations, or non-resident aliens. Additionally, the company may only offer one class of stock, and certain financial institutions and insurance companies are ineligible for S corp status. S corporations face specific tax filing requirements with strict deadlines. The annual tax return, Form 1120-S, is due by March 15th for calendar year corporations. While businesses can file Form 7004 for a 6-month extension, this only extends the filing deadline, not the deadline for providing Schedule K-1s to shareholders. When an S corporation files late, the penalties are substantial. The IRS charges $195 per shareholder for each month or partial month the return is late, up to a maximum of 12 months. This applies even if the corporation owes no taxes. For example, an S corp with 4 shareholders filing 3 months late would face a penalty of $2,340. Late filing doesn't just affect the business, it directly impacts shareholders as well. Schedule K-1s report each shareholder's portion of income, losses, and credits. When these forms are delayed, shareholders may be unable to file their individual tax returns on time, potentially facing their own penalties. The uncertainty around taxable income can also disrupt personal financial planning and estimated tax payments. To avoid these costly penalties, S corporations should implement proactive measures. Setting calendar reminders well before the March 15th deadline is essential. Working with qualified tax professionals ensures timely preparation and filing. Maintaining accurate financial records throughout the year prevents delays when tax season arrives. If your S corporation has already incurred a late filing penalty, you may have options for relief. The IRS offers several avenues for penalty abatement. First-time penalty abatement is available for S Corp with clean compliance histories. To qualify, the corporation must have filed all required returns and paid all taxes due or arranged payment plans. There must also be no significant penalties in the prior 3 years. Another option is reasonable cause relief. Valid reasons might include natural disasters, severe illness, serious business disruptions like theft or fire, or inability to obtain necessary records. Simply forgetting or not knowing about filing requirements typically won't qualify as reasonable cause in the eyes of the IRS. To formally request penalty removal, use IRS Form 843, claim for refund and request for abatement. Your submission should include a detailed explanation and supporting documentation that justifies the request. When an S corporation files late, the IRS typically sends Letter 1125 or similar penalty notices. These communications specify the total penalty assessed, the number of shareholders the calculation is based on, and instructions for payment or disputing the charge. Responding promptly to these notices is crucial, as ignoring them can lead to escalating enforcement actions. Understanding S corporation filing requirements and potential penalties is essential for business owners. The substantial cost of $195 per shareholder per month means even brief delays can result in significant financial consequences. By maintaining awareness of deadlines, working with qualified tax professionals, and taking prompt action when issues arise, S corporation owners can avoid these costly penalties and maintain good standing with the IRS.